Hey everyone, the professor here with your crude oil analysis update. Now, before I jump into that chart right there with crude oil, please understand this. This market right now is a completely fake market. If you stay until the end, I'm also going to show you a trade analysis on US 30. But again, we have to use extreme caution when trading because nothing on the technicals, on the indices are really working out as much as they usually do. And so we have to use caution with crude oil with regards to price action. Now, this is the setup right now, and this setup is based upon Fibonacci levels, hopefully seeing price come down into that 61 to 88.0 area. Let me make this bigger. That's why I've got a buy position somewhere in this area right in here. Okay. Now, again, just use, extreme caution if we get there. Okay. If we get there, I would use a very tight stop loss for this type of scenario. Again, I want you to keep your risk management in check. So it would be something like this, right below the 88, back up to the 0, and then closing this right at the 8 right here. I mean, a very, very tight stop. I'm sorry. Let's move this up here. If you get in here, a very tight stop loss. Okay, so that's kind of the scenario for this long position if we can get down there to that area. Right now, we have clearly seen over the last, this is an 8-hour chart, 24 hours, we have not been able to close below this 50%, which is about 77.40 or so. Okay, so we have not been able to close there. So right now, on a smaller time frame, we are just trending here, and I'm going to show you this on a smaller time frame. Now, to the top side, same thing. I'm going to kind of mark this up first, and then we'll drop down to a smaller time frame. We need to see a candle close above, in my opinion, this 0 line, which would be 79.80. You can probably make it even 80, right, to close right above 80, to then if we're going to go higher. Okay, so if we look at this from a 1-hour perspective, okay, this is kind of where we are at. We have still been respecting that trend line area there. Okay, so again, for me, you've got to really have this candle closure. We had this false breakout right here. You've got to get this candle to close somewhere up in here, and I'll make this a little bit tighter. Okay, if we are going to see price going back up towards $81 a barrel. Okay, for right now, we've got to continue to look at this and play this trend line. Now, taking a sell from here, again, would be a very, would be a move that if you take, you have to have good risk management, right? If you're coming back up here to this level, okay, and you're going to take that sell, you've got to look at this fib level right here, okay, and that would put it right at the circle that I drew there. Okay, I think everyone can see that it would be right around that circle right in there. Again, in this particular scenario, risk management is the key to trading. This short position would look something like this. If you're going to grab it near the 61 or the 88, let's say somewhere right in here, your stop loss would have to be this wick, and you would want to bring it back down to the 0 line, okay, right to where we left right here. So that would be the kind of sell trade in the opposite direction until we close above. Because you can see here, if we close above here, like I talked about, then we would have taken the stop loss out, and then we're going to go higher. Okay, so I've given you the opportunity here to look for an intraday opportunity, both on a sell position and on a buy position. The key here is going to be patience. Also today, I believe we have the crude oil inventory, so that's going to move price. So if you don't feel confident trading with news, do not trade. Okay, do not trade. You're better off not trading and waiting until the news goes than getting into a trade, unless you are going to follow proper risk management with some of the examples that I gave you there. And then that crude oil news may or may not tip its hand on the ultimate direction of what crude oil is going to do over the course of the next 2 days. And of course, if you're in our Diamond members area, I'll be updating you inside of our private chat area as well. Hey, so far, if you're getting value, hit that like button for me. If you're brand new, subscribe. All of you need to hit the notifications bell so you don't miss the professor's trades coming right to you. Okay, let me give you a little bonus analysis here. Let's get back over to the chart and let's drop over to US 30. Again, another highly inflated market. Look at this move here that happened yesterday, right? This big push up. You know how much money was introduced here by the big institutions to bring price up? But anyways, let's take a look here now at the 8-hour. Let's kind of see what we are doing. If you can see right here, we are here at this area right in here. We may come up, okay, to take out this high right in here. Okay. And again, a lot of retail traders are going to be trading this again, thinking it's a third touch. I say we go a little bit higher. Okay. I say we probably go a little bit higher. So I'd like to see price come into this area right above this wick over to the left to start. Let me make this green, not green. Let's make it blue. I'd like to see if we can hit that aqua line right around there to then enter a sell position on US 30. That would break 35,000. There is a psychological number that trading institutions like to have. So the markets can say, hey, we broke 35,000 today and keep everybody very, very happy. Because I think behind the scenes, there's some stuff going on that you and I have no idea what's going on, but there's a lot of money being moved for political reasons. The wealthier are getting wealthier and the poor are getting poorer because, again, this is a market where we've seen over the last couple of weeks, we've seen a gap still open for 3 weeks, unheard of. We've seen a jobs report saying that jobs did not meet expectation and the inflation rate, the unemployment rate went up. Stock market continued to climb. When you start seeing those things, there's something called a reverse market. And that reverse market means there's a graph for this. I didn't have time to put this together for this quick analysis, but basically means that the top 1% are continuing to make money off the middle class and the lower class. And so there is no reason why the stock market should have gone up. Okay, if you look here from that news jobs report, okay, I mean, again, since October to where we are now, 2,587 points. It's like that doesn't happen in a market where pricing is going up, people are struggling, unemployment rate is up, jobs are down, and yet we've skyrocketed in the month of November. So again, we are in this reverse market. There's nothing we can do about it. What we can try to do is be cautious in trading inside of it. So I'm going to be looking for that area to try to grab some points down on the US 30. I think when it falls, and I used to say it's going to fall, now I'm going to say if it falls, because who knows what the powers to be say. It's not going to fall back down to those levels because, again, we are nearing the end of the year and everybody wants to grab their high return rates in their pensions and 401ks and in their investments. And that includes all the political figures as well. So again, we'll see dips in the market, but we are definitely in a market right now that the smart thing to do is to really buy the dips in the indices. So I'm hoping to catch a reversal at that point. But from that point forward, it looks to be we have to buy the dips. The market will probably finish strong for the rest of the year as it shows right now. Okay. So again, we're going to trade what we see. So again, hopefully you got some value today and I'll see you on the next video.